Hi, my name is Michelle Walker Wade, California Registered Tax Preparer since 2003. I decided to do this tutorial or this informational video on the tax status of married filing joint versus married filing separate as it pertains to California, because California is one of the few community property states, and so the laws here are a little bit different. But the federal laws concerning married filing joint and married filing separate are the same. And I see what happens is when people get married, particularly in the second part of their life or after they have had children and have been able to file head of household and statuses that give a large tax refund. When they get married, they don't want to switch. They want to keep using one of those tax statuses, and they have a challenge. And so, what I see sometimes is people continue to use illegal tax statuses once they get married, particularly if they have children or if it's the second phase of their life. So this tutorial is to deal with that. Okay, so deciding which tax filing status to use when you're married and when you live in a community property state such as California. Okay, the IRS law states that whatever your marriage status is on December 31st, that's your marriage status for the entire year. Okay, so it doesn't matter if you got married in June, which many people like to get married in the summer, June, July, August. Whatever it is on December 31st, that is your tax filing status. And for most cases, except extremely rare cases, maybe 1 or 2% of the time, you only have two legal filing statuses once you are married, and that is married filing jointly or married filing separately. You're no longer legal to claim or to file head of household. I put a link so that you can verify your status. So whatever you are on the end of the last day of the year, that is your status for the entire year, whether you and your husband live together or not. Okay. All right, so here's a chart that explains what you'll need in order to do your filing. If you choose to marry filing joint, you're going to pretty much need the same thing that you need if you're married filing separate. When you marry file separate, you still have to report all of your spouse's income, expenses, deductions, and whatnot. The only thing you do not have to do, or that is not applicable to you, is you're not liable or responsible for their taxes, but you still have to report it. So that's for your federal. You're going to file married filing joint or married filing separate. You still have to report their income, their expenses, their filing their filing status will be one of should be the exact same as yours. So, and you have to still report all the same information. In California, California does not recognize married filing separate as a true status because it is a community property state. So your tax return will be a 50-50 split right down the middle for everything. Your wages will look the same or your income will look the same. Your deductions will look the same. They're exactly the same. Now, if you're married filing separate, which I'll talk about in a sec. Well, let me not get ahead of myself. So you've got that. You need all the same things. You've got to report their wages, their interest income, their dividend income, tax refunds, everything. You still have to report it on your IRS tax return. You simply are not liable for whatever reason, any taxes they may be, your spouse may be responsible for as a result of whatever they have done with their income and expenses for that tax year, but you still have to report it. Okay, so hopefully now you understand that it is illegal to file head of household when you are married, unless there are certain circumstances. Legal separation, completely estranged from your spouse are the two primary ones. Completely estranged means you have no way of contacting them. It's not that like you just don't want to talk to them. You actually have no way. They're homeless on the street somewhere. You have no idea where they are. Something like that would be estranged. But other than that, married filing jointly and married filing separate are your only two choices. So why would you choose one over the other? Number one, a reason not to choose this status is because the illegal reason, you want to file head of household. That's illegal. Don't do it. Okay. But a good reason why you may choose to do married filing separate, maybe you know your spouse has some indiscretions and you do not want to be liable for them. If you file together, you will be liable for your spouse's indiscretions. So that might be a reason why you choose not to file jointly with your spouse. Another reason you may choose to file separately and not file jointly with your spouse is perhaps you've done the research and you've done the work, you've done the calculations, and you can tell that between the two of you, you have enough deductions, itemized deductions, where you would actually get a better refund or owe less if you filed separately. And that's under rare instances, you would have to have a ton of itemized deductions for that to be your situation. The deductions would have to be so high to the point where they start to what's called phase out. And phasing out means you've already reached your cap on how many you can itemized deductions will count, and you just do better by separating your taxes. That's another reason why you might decide to file separately. And the third reason why you might decide to file separately is because you're in the process of a divorce or a legal separation and you just do not want to commingle your taxes with your soon to be ex spouse anymore. Those are three good reasons to file separate. Now, some good reasons why you would not want to file separate, some reasons why you just shouldn't file separate. Number one, you'll automatically pay your taxes at a higher tax rate. So that's a good reason. Number two, you may, as a couple or as a head of household, you may be entitled to certain tax credits. Once you decide to go with married filing separately, you are no longer eligible for those. For example, the child tax credit, the dependent care credit, earned income credit, all of your education credits, your adoption credits, which for some people that matters, or your deduction on your student loan. You are no longer eligible for those credits and deductions. So you got a higher tax rate and fewer credits, fewer things to offset your tax liability. So those are some reasons why you would just want to go ahead and file jointly with your spouse. In terms of the California side, it's a community property state, so everything is split 50-50 right down the middle. Whatever your spouse files on their taxes, you have to file 50%. Your tax returns will look exactly the same. You'll take their wages and your wages, their deductions, your deductions, and split them right down the middle. Another reason to file jointly and not separately is because whatever, and this is for your federal tax return, whatever uh, type of deduction your spouse takes, you have to take the same one. So if your spouse uses a standardized deduction, you have to use standardized deduction even though you may have enough itemized deductions. The flip side of that is you may have plenty of itemized deductions and now your spouse has to itemize and they may not have any. And so they will get no deductions through their taxes to bring down their tax liability. That's another reason why to just file joint. Okay, so question. What if we're married, but we didn't live together, but we're not legally separated, nor are we estranged, and I have a child or dependent, can I file head of household? The answer to that question in most cases is no. Per the IRS law, if you were married on December 31st, the last day of the tax year, doesn't matter if you got married in June or July or August or November, if you were married on December 31st, you are legally married and the IRS considers you married and married for the entire year. Okay? What if you got married but you didn't live together? The IRS still considers you as married and members of the same household under most circumstances. And I put here what is considered under the same household. If let's say your spouse was missing because they're incarcerated or they're ill or they're away on business or military service or they're away for education, you're still considered to be married and dwelling in the same household. If you're dwelling in separate houses for reasons such as you were estranged or you are legally separated, then that's where the difference comes in. But if you're living in separate households for any other reason other than legally separated or completely estranged, the IRS considers you married and dwelling in the same household. So the moral of the story is you might as well go ahead and file jointly unless you want to commit fraud. Okay, so there's my, not too long. I'm sorry I talked fast. I wanted to get a lot of information out in a short amount of time, but I will put downloadables in the comment field so you can take your time and look over them. Have an awesome day, and thank you for taking time to listen to this um, quick tutorial. And one final comment. If you are one who does any type of premarital counseling or talks to people regarding their finances, or just their relationship prior to marriage, especially if they're getting married at a second stage in life, please make sure you talk to them about their taxes. This does become a source of contention. All right, people get divorced over money all the time, and I think this is something, I know this is something people should know before they enter into marriage, that this is a legal expectation that they're going to be faced with as soon as the new tax year starts. All right, have an awesome day.